Good morning. Welcome to IG's Early Morning Call. It's Tuesday, the 3rd of October. We've got a mix of headlines that we've seen repeated time and time again over the last few months. Let's take a look at those. We lead with the dollar as we see a continuation of this dollar strength affecting markets pretty much around the world. Several board members agreeing that rates stay high for some time to come. As a result of that stronger dollar, we have got gold falling once again. UK retail sector very much in focus this morning. We've got some good news and some not just good news coming through with a profit warning, or rather a revenue warning from Boohoo for the full year. But Greggs humming nicely on the high street. And oil prices on the way down. Traders taking profits according to analysts, as we see Brent and WTI rising 30% in the third quarter, but things looking a little bit more on the downside as we enter this trading day ahead. Let's take a look at what's happening with volatility. This is where we are at the moment on the VIX index. We've got the market on the way up for the third day in a row, up at 18.1. It is indicating that we're looking for areas of risk where we're taking money off the table. And you can see quite clearly it's all about what's happening with the major indices. Yesterday, big heavy declines in the London markets, biggest decline we've seen there since the middle of August. And we're approaching the 76.4% retracement at 74.58. I think the strength of this drop here today, I think it's more than likely we're going to get a candle close below this line of support at 74.58. Just a question of what, 30 or 40 points on down from where we are at the moment at 74.93. And then the total retracement, very much the eye, I think, on the prize on those trading short on the London markets. It doesn't stop there because we've got losses across the board on many of the European markets as well. You can see on the German DAX that we are down again in today's session. We're looking for a lower open. But in fact, the markets have been a lot worse off earlier in the session today than they are at the moment. We'll see in just a minute the fact that many of the Asian markets on the way down today. 28th of March was the last time we saw these sort of levels on the German DAX with losses there across the index. And it's the same sort of thing in France, same sort of thing in Spain, same sort of thing in Italy. It's just a question of selling these markets. In the French markets, you can see we've got the lowest trade there since the 24th of March as well. So it's picking up on the downside as we see a continuation of what's been happening across the board. Let's just quickly tune into what's been happening overnight in the Asia-Pacific markets because we've got declines across the board there. Just to remind you, there's no trade across the Chinese markets at all this week. And the Hang Seng Stock Index is actually back on the session today. There you can see there. In fact, that's Hang Seng down 3%, not the Singapore STI. Nikkei down 1.8%. S&P ASX 200 down 1.25%. Let me take a look at what's been happening, because if you look at these markets, this is the Hang Seng Stock Index in today's session. We did have trade on the 24-hour markets yesterday, so we did have a little bit of a knock on the markets as the market wasn't trading cash yesterday, but the 24-hour markets on the IG platform did trade. But we got this pickup on the downside, currently down 2.18%, and that's the lowest print we've seen since the 28th of November last year. So the Hang Seng Stock Index looking in a fairly parlous state. Let me just quickly run through some of the other markets because it's worth looking at these. The Nikkei 225 disappearing below this line of support at 31,250. We're currently trading 15 points below that, down at levels they're not seen since the 1st of June this year. Negativity across the board in all these markets. Australia, likewise, down as well. You can see punching below that line of support. And then a little bit of a recovery. We're currently trading above that 69.31 support at 69.44. But in today's intraday trade, we've seen the lowest print there since the 24th of March. Look, you get the view of what's been happening across the markets. Let me just quickly run you through the 24-hour markets as well on Wall Street. Yesterday, this was the Dow Industrials trading at levels there not seen since the 2nd of June. We're awaiting this third quarter earnings season coming up. And I think reality beginning to bite, many now pricing in the fact that the Fed, we've been saying this over the last few weeks, the Fed is not expected to really accelerate on interest rates on the downside for some time to come. And there's a broadening realization, I think, in the markets that this is what's going to happen. We didn't see too much of a move, actually, it has to be said, yesterday on the US markets. The Dow was down 0.25%. In fact, in yesterday's session, the S&P was up by a fractional margin in the trading day, although we did see a 24-hour red candle yesterday. The market was up 0.0079%, just a third of 1 point up on the session in yesterday's trade. We got at 72.85 on the S&P 500. NASDAQ, let me just tell you, that was up 0.02% in yesterday's trade. Just to quickly show you what's happening on the 24-hour markets, and we're flatlining at 14,817. So it gives you a flavour of what's been happening there. Just a couple of stock stories bubbling under the covers. Let me just quickly show you this stock here. Third day in a row of gains in yesterday's session. Strangely, I say strangely because before the market opened yesterday, Tesla published its deliveries in the latest quarter, short of Wall Street's reduced expectations as those planned factory shutdowns hit production. Demand for electric vehicles as well, down in the face of higher interest rates. It delivered 435,059 vehicles in Q3, below the 440,000 that was expected. Most analysts have been looking for. The figure was 27% up on the same period the last year. So that was the only good bit of news, is the fact they have succeeded in continuing to expand production. It just hasn't been as robust as many had been expecting. But that stock ending up all sessions on the IT platform yesterday by a margin of 0.37%. One other stock story worth mentioning is that of Birkenstock. Now, this is the German sandal maker. It issued a note in its impending US IPO yesterday, targeting a valuation of around about $10 billion. The German premium footwear brand plans to sell at least 32 million shares, likely to be priced between $44 and $49 a piece, and raising around about 1.58 billion in the process. And that would be the top end of expectations when it published its details earlier on. Birkenstock also revealed the nomination of Alexandre Arnault, the son of the billionaire LVMH chairman Bernard Arnault, to its board. So that's Birkenstock coming through with more details on its impending IPO. Goodness knows, we've seen so few IPOs this year. And as we know, ARM Holdings getting off to a roaring start, but then ending up going below the IPO price. We'll have to see how things develop there when we get the date for the IPO of Birkenstock. Now, let's take a look at what's been happening earlier on today, because I want to take a look at what's going on in the currency markets and specifically around what's been going on in Australia overnight. As expected, the central bank left interest rates at 4.1% for a fourth month in a row. And it said that recent data, consistent with inflation returning to its 2 to 3% target over the time, with output and employment still growing. But again, it warned that further tightening might be needed to bring inflation to heel in a reasonable time frame. Now, this is the rhetoric we're hearing from many of the central banks. They're hedging their bets. But what's been happening today is that we are very close now to a completion of this double top pattern that we saw between the middle of June and the middle of July. And that projection took us all the way down to 63 cents. And we are just 16 pips away from that at the moment at 63.16. Disappearing below that, you've then got the next line to watch out for, which would be all the way down here at that line of support at 61.70. So if you're short on this, that's your initial price target where you take profit at 63, and then a candle close below there. You're then short trade again, taking it down to 61.70. If you keep the trade open, just keep on bringing your stop loss in, so you lock in those profits. But it wasn't just against the US dollar where we got weakness for the Aussie against the Kiwi. We've got the Reserve Bank of Australia tomorrow. I was using this as a risk event for my look ahead to this week. Last Friday, I issued a note on this, talking about the downside risk for the Aussie against the Kiwi. I mentioned it because it's now working out really nicely. To be fair, I'd have mentioned it in any event just in case I'd have been stopped out, but I haven't been, and indeed making profits on the downside. And my contention is that this rhetoric coming through from the central banks, if anything, it's going to see slightly more dovish tilt towards the Aussie central bank than the Kiwi. We've got the Kiwi central bank issuing its interest rate decision very, very late tonight in the UK day. So we'll get that overnight reaction to that. But that's certainly one stock, one FX story certainly to watch. The other one is all about this idea about interest rates and the longer term plan. Fed policymakers disagreeing on how high interest rates could go, but there seems to be no discussion at all. The monetary policy needs to be restrictive for some time to come to bring inflation back down to the Fed's 2% target. That's certainly what appears to be the case at the moment. Yesterday, the Fed Governor Michelle Bowman said despite considerable progress, inflation continues to be too high, and it will likely be appropriate for the Fed to raise rates further and hold them at a restrictive level for some time to come. She was speaking at a separate event in New York on Monday. The Vice Chair, Michael Barr, he's the Vice Chair for Supervision. He said that the most important question is, at this point, is not whether an additional rate increase is needed this year or not, but rather how long we need to hold interest rates high at sufficiently restrictive levels to achieve our goals. And adding, I expect that will take some time to come. This is a reality I was talking about earlier, about more and more people now believing this idea that rates are going to stay higher for longer. Cleveland Fed leader Loretta Mester, she was also out yesterday talking about the Fed's work, and it was not likely to be done anytime soon. I suspect, she said, we may need to raise the Fed funds rate once more time this year, and then hold it there for some time to come. Now, the end effect of all this, if we look at a chart to take us through the effect of this, is on the dollar basket. This says it all. Rises, continue to rise. We saw at the back end of last week a little bit of a retracement, but that is all it was. And we got this hammer candle down here. Now, this was a very, very small retracement in terms of the timescale, bearing in mind we've seen this big rise over the period from the lows we had back on the 18th of July. That hammer candle there indicates a trajectory. It's like a slingshot. When you get this big lower candle wick, it's like a slingshot that takes you back up, and that's exactly what's happened. And look at this today. We are ever so close to breaking the highs we had back on the 30th of November last year, but then take us up to levels not seen since the 22nd of November. So the impetus, I think, remains on the upside. If you continue to be long on this, bring your stop loss in 106.74. We're looking for a break of the 106.88 to take us then up to those next new levels to watch out for. Yesterday was another strong day for the US dollar. In addition to this, not just the fact we saw those commentary reports out yesterday, but the dollar basket now trading that highest level since November last year. The greenback finding extra support in the latest ISM services PMI data. The index rising to 49, still in contraction territory, but an improvement on the 47.6 recorded in the previous month, and beating expectations of a 47.7 reading. Now, the end effect of all what we're going on is that we've got these big declines here in precious metals. Precious metals are the most responsive area to a rise or fall in the US dollar. There's this contrarian move that we've got, and we've seen a spectacular loss of value in gold. Wait till I show you silver in just a minute. You really do have to strap yourself in on this one. We're currently trading at 1824. 1804 is my line I've been watching out for. You get a break of that, and then there's not much then on to stop you all the way down to 1726 will be the next low to watch out for on the price of gold. Look at the steepness of the momentum. People piling into this short trade at the moment. And if you take part in this, you continue to keep your stop loss pulling in further on down as we go on further on lower and lower in this market. Just to take a look at what's happening with spot silver, because this is another area of the market. We've seen some stunning losses. Look at this. Now, it's an interesting candle shape just developing here. Now, I was talking about that slingshot to take you higher in the dollar basket with that hammer candle. Look at this hammer candle here developing. I've yet to see whether or not we are going to get a spectacular return to any sort of upside form here. But it is interesting to note when you get these lower lows driven by, on a daily candle, this large candle trough down here, and then you get a snapback. Was yesterday's downside overdone? Obviously, many believing that was the case. But in fact, look at this. We're now broken this line of support at the 76.4%. The next target price is technically 1990. We're trading at 2106. That would then take us down to levels not seen since the 10th of March. So that technically is the next line to watch out for. But I'm interested in this candle shape to see how things develop there today. So at the moment, at least, continue to be lower lows on gold, but silver seems to possibly have found possibly even just a short-term bottom. We'll have to see how things there move on. So let's take a look at some more economic data out later on today, and that could stir some further gains in the dollar potentially. This afternoon, we get the jobs report out. This is the job openings in the States, expected to remain broadly unchanged last month. Last month, they fell to their lowest since May 2021. What this indicates is that many employers are just not creating new positions. And those positions that are being created, as we've seen evidence coming through from recruitment companies, they're temporary, they're contract work, they're not long-term career-making, defining roles that people are looking for. It'll be the first test for the dollar. You may remember last year how the greenback fell as the drop in job openings led investors believe the Fed tightening campaign was coming to fruition. We saw later how this fall in the dollar was only a blip in the rally. Now, tomorrow, the ADP employment change is coming out, and that's going to be the big thing now for this point on for the week. It's all about job reports. The ADP private employment report, it's expected to slow for a third straight month. 160,000 job creations are being targeted in a number by economists. This after 177,000 in the month of August. And on Friday, we'll get the September non-farm payrolls. There too, job creations are forecast to slow down. Early expectations are for 163,000 added to the US economy. Jobs are still being created, but as I said, they tend to be the short-term contracts and more temporary roles. And I think that's what we'll get from the evidence that we're getting there from what's going on the position on jobs. Let's take a look at the euro-dollar trade ahead of all this data. And that higher high for the US dollar is creating lower lows for the euro and indeed many currencies against that stronger US dollar, apart from the yen, which I'll show you in just a minute. In today's session, we're now there down at 7th of December lows at 107.40, crashing through the 105 level for the first time in a while in the last 18 hours or so. This next line of support at 102.90. Sterling, same sort of price action. In yesterday's trade, a big heavy drop on the way down, building on that at 120.80. 120.10 is the line of support created by the low point we had back on the 15th of March. Looking for a break of that, taking us then down to 118.05. I mentioned the Japanese yen. This is an interesting dynamic. Traders really frightened to add any further upside to this trade. And in fact, you can see, we've got another red candle here. The highs we had here, look at this, ever so close now to the 150 level, 149.93.7. You remember Mr. Suzuki, the finance minister, a week or so ago saying, look, don't look at levels on the markets. Don't worry about anything in particular. But traders have got this 150 line in mind as the point at which will trigger intervention in the markets by the Japanese authorities. Will it happen? Will it come to pass? I think Mr. Suzuki's commentary last week, it came in two bouts, was very interesting. First saying that we've got to control the volatility, but at the same time, don't expect us to do anything just because you see markets hit a trigger point. That trigger point is so close now. Whether or not the authorities are standing by remains to be seen, but traders daren't take it any higher because of the fear that they'll then be wrong-footed and then the markets will break down. If you are long on this, expecting a higher move, keep your stop loss in really, really close. And also, I would also perhaps possibly guard you against putting an ordinary standard stop loss on. Put a guaranteed stop loss on, because if the market does gap down, if there is intervention when you're asleep and you can't correct your position, you want to be taken out on a guaranteed stop loss. Guaranteed stop losses are the only way you can guarantee to be taken out if there's a gap lower in the market. And that gap lower in the market could be created if the Japanese authorities do come in and start to intervene. And that would be my only sort of word of caution on this market at 149.77. So enough of currencies, or enough of the dollar, which I think is really what the story is there. Let's take a look now at some of the corporates out. I want to begin first of all with Greggs, the high street bakery chain. This company, as I've said in previous quarters when we see trading statements coming through, it's absolutely got the market pinned down to a T. And you can see this in the numbers this morning. I'll take a look at the share price in just a minute, but I want to talk about the numbers. Q3 trading statement, solid performance, as we've come to expect. Oh, that looks nice for breakfast. Total sales up 20.8% for the 13 weeks to the 30th of September 2023. Like-for-like company managed sales up 14.2%. Now, listen to this. 82 net new shops opened year to date, 144 openings, less 62 closures. They're expecting 135 to 145 net shop openings in 2023 and around 40 relocations. Now, the relocations is really interesting. And I go on about this every single quarter because I think this is what the company is really good at. They can close and open stores almost in a day's trade. And what they're doing is they're literally picking up some shops and they're putting them round the corner because they get better footfall. They just transfer all of their shop equipment. They transfer all of their branding. And they put their stickers on the windows. It's almost like a pop-up shop. They're expecting to see some easing in cost inflation as expected. Now, this is good news as well, which means that margins will continue to be more robust. Full year outcome expected to be in line with previous expectations. This stock has seen 2 days of gains, closing yesterday at £24.78. If you are long on this stock, goes quite tightly in underneath yesterday's candle at around about the 24.50 level. And then 24.78 is where we're trading as of the close last night. So if you do expect a rise, you can benefit from that. As I said, nice tight stop underneath yesterday's low point on the candle. Meanwhile, Boohoo has come through with its first half numbers. Very, very different set of figures out, as I said in the headlines this morning, a revenue warning for the full year for the internet clothing retailer. Boohoo has seen revenue in the first half down 17% to 729.1 million. UK revenue down 19%, international revenue down 15%, adjusted EBITDA down 12% to 31.3 million. Adjusted EBITDA margin 4.3%. Now that's up 30 basis points year on year, which for me is probably the only bit of good news I'm seeing from this number this morning. Net debt expanding from 10.4 million to 35 million. Inventory significantly reduced, down 94 million or 35% year on year. Given the slower volume recovery than previously anticipated, the company says they're targeting more profitable sales within their labels. Revenues for the year ending February 24 now expected to decline by 12% to 17%. That is worse than expected. Let's take a look at the share price chart. In the last few days, it's been trading below the 31.9 pence level support that I've drawn on here. Let me go back to the very beginning of where we traded Boohoo stock. And you can see these are levels not seen since the 30th of September 2015 with that breakdown there. The stock closing down at 31.6 pence. I can't see any good news apart from the increase in margin. I can't see any good news out of this. And with that revenue warning for the full year, potentially another stock drop for Boohoo at the start today. I don't have a position on this, but that is how I see things. Let's take a look at what's happening with in the air with Ryanair. Continues to be relatively robust in the market. And this is a company which normally sees a load factor around about 94-95%. So we're not too far below the recent highs that we've seen. Passenger traffic up 9%, 17.4 million guests. I love that phrase. 17.4 million seats filled in September, basically. This is a company that used to trade on the London Stock Exchange, only trades futures now, but it trades on the Irish Dublin Exchange. And it is, as of yesterday's trade, down for a second day in a row. Where it goes from here depends on how you take your choice on this, I guess. But I can't see any reason necessarily to move this stock from where we are for Ryanair. You can see this big recovery we've seen in Ryanair. And it's done for a lot of these, these airlines, excuse me. That was up 72%. From the lows there, going back, what was it, October last year, to the highs that we saw in the 3rd of July. Since then, there's been this consolidation with support at 15.50. One of the big elements of what happens in the oil, in the air sector, rather, in the airline sector, is oil prices. And as oil prices rise, unless you've got your hedging right, it's something that these companies do find it difficult to cope with. Oil prices falling sharply yesterday on the spot market. We've recently seen one of the most recent contracts expire. And I think that was another reason to sell this market down. It's sort of trading at a 3-week low. Brent and WTI falling around about 2.5% or so in yesterday's session. Look at the shape of the chart, dropping away from these recent highs that we've seen in the stock. That high that we saw there back on Thursday last year was the highest print we've seen since the 14th of November last year. So not too far away from one-year highs. And analysts are saying that traders are taking profits. And look at this, another hammer candle here. Are we expecting some sort of recovery here? OPEC Plus members are due to meet tomorrow. Saudi and Russian supply cuts are expected to keep feeding into stronger oil prices. Supply cuts expected to be extended into 2024. Neither country wants to see prices falling while they have to manage higher government expenditures. Now that's Brent. Quick update on what we got in terms of WTI, just to show you, to convince you, same sort of price action running here. Yesterday was a 3rd day in a row of losses, and we're not too far away now at 87.83 from where we closed that yesterday's session. As I said, that hammer candle. Interesting to see how that develops over the next few days. I guess it will really all be about that OPEC meeting. A Reuters survey of 42 economists and analysts posted last Friday shows that they now forecast Brent prices to average around about 84.09 a barrel in 2023, up from the August consensus. Just want to quickly return you to the Brent chart just to show you where 84.09 is in consideration to the price we've got out at the moment. Just see if I can move that down to 84.09 a barrel. There we go. That's roughly the area to watch out for. That's where they're forecasting the 2023 average for this year to be. And you can see, as we've seen since the beginning of the year, is, let me just quickly take you back to the start of the year, it was that candle there. And that is pretty much in line with that 84.09 level we're talking about for Brent. So that was an average price for the year. Let me just quickly take a look as well at what else is happening in the markets responding to that stronger dollar. I've been targeting 8,000 copper, and we're not too far away. We're now just $10 away from that. In fact, in today's session, the low point we've seen has been at just a whole $1 over the 8,000 level. I'll be talking a little bit later on today to John Mayer, who has a view on this. I mean, his view is that we should be seeing higher copper prices, but clearly that's not happening. But in today's session, we have dipped below this line of support we had from that inverted head and shoulders. And that's just a quick flavour of where we are in terms of some of the market moves on this Tuesday morning. Do watch out for Boohoo and also Ryanair at the start of today's trade, and Greg's another one at the beginning of today's session. 3 stocks potentially on the move because of updates that we've seen this morning. We're back at 10:30 with Charting the Markets.